Is NIO a good investment? Let's run through the bull and bear case in a few minutes. My name is Brian Feroldi.
And my name is Brian Stoffel.
Brian and I recently did a deep dive on NIO, which is called the Tesla of China. Here's a summary of what we found out. So Brian, for those that don't know, what does NIO do?
So much like Tesla, they've got many different brands and varieties of all electric vehicles for sale in China.
That's right. They produce 4 models, and they do it in a very Tesla-like way. This company was founded years after Tesla, and a lot of Chinese companies model themselves after successful U.S. businesses. That's what we've seen here. One thing that we thought separated this company, or where they diverged from Tesla, was with their NIO-powered business. So one thing that's pretty cool about these cars is that you can choose to rent the batteries as opposed to own them. If you go that route, you can swap them out at these really cool stations that they have, but more importantly, it lowers the upfront purchase price of the car, and that makes electric cars much more affordable. In addition, that provides the buyer with some flexibility. If you're just going around town, you don't need a huge battery, but if you're taking a long trip, you can swap it out and get the big one. That's pretty cool.
And then they've even gone a step further and done something that we don't often see. And they've created a lot of brand awareness by having things like coffee houses and co-working spaces and these actual physical brick and mortar places that you can go to, but only if you are an owner of a NIO vehicle. And that really builds up a lot of brand awareness, a sense of cohesion within the owners of these cars.
Yeah, one thing that we heard after we did our deep dive video was that the brand loyalty amongst customers in China for NIO seems to be very strong. About a year ago, this company was really struggling financially, and we heard anecdotally that people really came together to support the company, very similar to how they did with Tesla in the United States. So I think these NIO houses are doing a really good job of building brand loyalty and community. But the important thing here for investors to watch is growth, and NIO has it.
Right. And so this is a little bit confusing to use, but really, if you start on the left-hand side, that shows you how many deliveries of the cars happened last quarter, 20,000, compared to the number underneath, just 4,000. So they 5x the number of deliveries in the first quarter from 2020 to 2021. And while they're not all 5x's, that trend is relatively stable of really bonkers growth every quarter going through here.
They're really growing in the core market, and that's what matters. And we see that on the revenue side. So NIO reports revenue in 2 segments. First is vehicle sales, which, as you can see, is the lion's share of revenue. But then there's that other sales, which includes the battery rentals, as well as some revenue that I get from lifestyle brands associated with the NIO house. The growth on both of these figures has been outstanding. The compound annual growth rate on the other business has been 241%. Yes, it's off of a small base, but 241%. Meanwhile, the growth on the vehicles has been 93%. So this company is in hyper growth mode. So Brian, what's the bull case from here?
So first of all, they're mission driven. They say the blue sky horizon, the blue sky is coming, a blue sky tomorrow. The idea is that, look, pollution's a problem in China, and they're saying our solution, our product will be part of that solution. I love that. I think it's great.
We both love that about this business.
So it's a founder-led business. It was founded by Bin Li, a CEO who I used to follow at his previous business that he founded called BitAuto, which was dealing with automobiles in China. So this is clearly someone who is still young, but still has a deep history in this industry in this country. Already free cash flow positive, which was something that really surprised both of us, given the fact that this is a capital-heavy business. So that's a great sign. We really believe in this counter positioning of the battery swap, the lowering the price to buy it and then getting recurring revenue from that. That's not something that we see elsewhere. And building up the brand value through the NIO house can really set to differentiate this company from the competition, because there's a lot more in China than we're used to here in the States. And there's an enormous market potential in China for these vehicles.
The automobile market in China is one of the biggest in the world. And if this company can be a leader in literally one of the biggest growing markets in the world, this company's potential is just massive. But what can go wrong about this business? Well, one thing that we noted, and it's just the nature of any automobile business, there isn't a ton of recurring revenue. When you sell somebody a car, yes, they might get a little bit of revenue from the battery if they go that route. But once you buy a car, you tend to have that for a period of years. That changes the dynamics of the customer relationship. So this is not a high recurring revenue business, at least in its current form. Number 2, this is a competitive market. When you see enormous opportunities that come aboard, there's also lots of competition. And not only is there competition in the Chinese market from other electric car makers such as BYD, but there's also Tesla and American car companies such as GM, Ford, and companies like Volkswagen. The competition in this space is intense and it's likely to grow. 3, one thing you just got to know about this company is it's in China. It's doing business in China. That means you're taking on that geopolitical risk with the company. 4, this is a capital intensive business. And because of that, they have diluted shareholders time and time again in order to raise capital to build. They are likely to continue to do that for a while. So you just have to get comfortable with that as a shareholder. So Brian, how'd this score on our investing checklists? Well, for me, this was a 51, and that ranks well below my why bother category. There were a number of factors that hit it, especially the relationship with the customers and the low gross margin and the lack of recurring revenue. So for me, this company is a pass. How about you?
So for me, the score was quite different. It got an 8.5. Now, part of that is because the only actual financial numbers that I include in my framework is cash, debt, and free cash flow. And the fact that they were free cash flow positive, and they do have a lot more cash than debt, was a huge positive. The rest of it just kind of has to deal with thinking about what the numbers mean. So for me, they got an 8.5, and key behind it is the fact that it is founder-led, the founder is heavily invested, and the fact that this counter positioning, I think, could be a difference maker.
Yeah, fair enough. So if you're an investor in this company, what should you be watching moving forward? Well, the number one thing that both of us have questions about is how wide is their moat? We don't live in China, so we're not going to be customers of this company anytime soon. Because of that, it's hard for us to gauge just how loyal customers are, just how strong the brand name is, just how wide their moat is in the area. If this company has built out a wider moat than we're giving it credit for, that could be a major positive. 2, they have reported positive free cash flow, which again, really impressive at this stage of the game. Can they maintain that moving forward? If so, this next question doesn't bother me so much, the lack of profitability. I care more about free cash flow than I do profits, but still, you're going to want to watch profits if you are an investor. And then finally is just watch the competition. As new cars come online in the Chinese market, as Tesla continues to ramp up, will that slow NIO's growth, or is the opportunity just so massive that there will be multiple winners? Brian, this isn't a company that we typically take to research because it's not in an industry that we know that well, and it's in a foreign market. But I think that both of us were more impressed than not.
Absolutely. I pretty much wrote this off when it became public, but reading more about that battery switching and seeing the unique ways that they're trying to build up their brand value makes me interested. It's not a stock that I own, but it's definitely one that I'm going to be watching.
Yeah, fair enough. And I also like that when we found out who the founder was, you were like, I know that name. That always makes us excited when the management team, the manager is a known entity for us and has a track record of success. So that was a pleasant surprise. Well, we hope you enjoyed this quick summary. What company would you like us to research next? Please let us know in the comment section below.